Vidhya Srinivasan joins us now, CFO with Bata. Let's understand the way forward for Bata. Demand is back. Our children, they have started going back to school. Bata ke jute, the company symbolizes with school shoes and a lot of other things. Vidya, so nice to have you back. Thank you for joining us. I want to understand first the demand and the pricing scenario, because demand has come back, but on the other side, if I look at pricing, whether it is on the commodity front or whether it is on the transportation front or advertising front, everything has gone higher. So how would you map the demand versus pricing scenario for us?
Right. So I think, of course, we have posted our highest ever sales the last quarter, and we've seen demand uptick across all our different channels. We've seen it across multiple geographies. The tier two, tier three towns are showing uptick. So I think that is certainly, a good indicator. Obviously, as you mentioned, ISPs have increased as well, mainly as a function of input costs increasing and sometimes, and also the GST tax rate change, which impacted us. So I think that is something that's happening. But what we are also trying to make sure is that we are trying to kind of look at how customers responding to the increase in prices and being cautious. So I think we're trying to balance both, is how I'd like to put it.
Do you think the demand which is back is here to stay, or this is an artificial sugar rush which has happened because the world has normalized post COVID?
I think it's been now multiple quarters now. So I think, of course, there was a bit of a sugar rush initially, but I think it's more or less stable now. I think now people are back to, offices, like you mentioned, back to schools, reopen. So I think there is I think now people have settled down, and that's essentially, and the demand is more real.
Um, Vidya, the one other thing that I wanted to understand was where is the demand really coming in from? We see in metro cities, yes, the malls are all packed and so are the Bata outlets. But what about tier two as well as three cities? Is demand as robust there too?
No, we've certainly had an uptick in tier two, tier three cities. As you know, we open a lot of our franchisee stores in our tier two, tier three cities, and there we're seeing very good growth. And that is also reinforced in the fact that we opened 20 more franchisee doors last quarter. We continue to ramp it up towards a trajectory of 500 stores that we talked about. That is happening, and I think it's happening on two fronts. One is there is a growing demand and awareness in tier 2 tier 3 cities about branded products, and therefore that is something that is coming through as far as products are concerned. I mean, as far as demand is concerned, we are also expanding our presence both through franchisee outlets, and therefore that is also kind of creating additional demand for us.
I understand that you also hiked and there has been an uptick in your average selling price. Has that been absorbed well across categories and markets?
I think, like I mentioned a little bit earlier, we've had to increase prices mainly because of two things. One, commodity prices going up, and also which has seen a lot of volatility over the last several months, and also because of the fact that GST rate hike has had an impact on us. But I think by and large we are seeing, that there is no fall off in demand at various price bands. But like I mentioned, we are also very cognizant of it. We are aware that we have a certain presence and equity, especially at certain price bands, and therefore we are trying to ensure that we have products there, so that the consumer has a choice depending on the price band that they want to participate in.
Okay, so that's the demand scenario, and as far as pricing also goes, the other question I want to ask you, you touched upon it a little bit when you were talking about demand, that you're going to look at franchise stores. But if I were to go through your results, what has been declared is that out of the 1,500 odd stores that Bata has, around 300 of them are franchise. So is this the new strategy? Is this where you're really going to press on the gas, and therefore will the focus be on the smaller towns?
Um, yes and no. In the sense, yes, certainly this is where our focus is going to be. We are kind of expanding our franchise door network. We are, opening 20, 30 stores quarter on quarter. And I think we are at around 320 plus. We are, we'll be 500, fairly soon. So I think that is something that is certainly important focus area for us. And, it's doing well both in terms of growth as well as in terms of sales at the outlets. But apart from that, we're also kind of focused on a product portfolio, and therefore that is something that we are really, pushing the gas on as far as especially metros are concerned, but even other places are concerned. So, our strategy towards casualization, premiumization, having good product stories that consumers can participate in. That is something that we are continuing to focus on, and we are selectively opening stores in the metros as well. So it's not like we have taken our eyes away from the metros.
Right, and like you pointed out and reminded us that you saw, the sales hitting a new high, a 7-year high in the results that were just declared. Since you're talking about product diversification, I thought I'll ask you about this. Again, in the results, you have disclosed that casual as well as formal 50-50% type of share when we look at the product portfolio. How do you see yourself innovating? Because you've seen that in recent times, right? Even if we to see the men's shoes, I walked into a Bata store recently and I was quite blown away by the sneaker collection, the canvas collection. The appeal by Bata has been to go out for the younger generation. What can we expect outside from the school offerings?
Great. Thanks. I'm glad that you liked our collection. So I think what we observed during the pandemic is that obviously people were more used to being at home. They wanted more comfort as far as their footwear is concerned. And therefore, there was a move towards casualization and also a move towards sneakerization, especially amongst the younger consumer group. So one of the things that we've kind of done is to kind of increase our range and our casual portfolio, like you mentioned. So we launched floats, we've launched flip-flops, sandals, sliders, mules. I mean, so we spent a lot of time and effort kind of expanding our range. We've also launched something called a sneaker studio, which is essentially, a wall, which is a one-stop solution that would offer, about 9 different styles over, which would be specifically around sneakers. And I think the consumers have reacted well to that. We've had a 40% increase in demand for sneakers from 2020 onwards. And I think that is something that we are continuing to ramp up on. And I think that is something that resonates well with our younger consumers.
Just to wrap it up with what's happened in the quarter gone by versus what is happening in the current quarter. What we're discussing are numbers for the quarter gone by. We are almost in the middle of this current quarter, in which commodity prices have come down, rubber prices have come down, international leather prices have come down. So will you go back to the pre-COVID margins, considering that the decline and the turn has already happened?
I don't think I can really comment on what our margins are going to be going forward, but I think what we can say is that in the coming quarter, our main focus right now is kind of gearing up for the festive season. Puja's around the corner. The festive season is coming up soon, and therefore a lot of our focus right now is to making sure that we've got the right inventory mix to address those, that and being prepared for the festive season demand, because that's a very important season for us.
Vidhya, I really appreciate your time. Thank you for joining us, and certainly hope to see
Thank
much
you.
more of you going forward.